Welcome back to the Value Investors Club. I'm your host, Simon Wunderlich. Let's get right into it with VIC readings, the form where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Forbo Holding AG. Price at the point of fighting is FORN. What ticker is FORN? Price at the point of fighting is 1,346 Swiss francs. Let me first say this is not a recommendation, not advice. Please do your own diligence before investing into anything, and let's get right into it. Forbo Holding AG is a net cash European industrial products company currently at an earnings inflection point, trading at 8x EBITDA, a 33% discount to its historical multiple of 11.9x EBITDA. The company has two stable businesses that consistently convert 50% of its EBITDA into FCF. This is because FORN SV is run by a management team with a sharp focus on maximizing profitability and shareholder returns, having returned 63% of its market cap to shareholders in the last 10 years through share repurchases and dividends. There's 48.2% upside to an investment in FORN SW if the shares simply return to their historical multiple. Additionally, FORN SW will see accelerated growth in the coming years as its beneficiary of two durable macro drivers: environmental sustainability and factor automation. FORN has two business segments: flooring systems and movement systems, both of which are leaders in their respective fields. Flooring systems, 68% of total sales. The flooring system segment manufactures the linoleum and a vinyl floor primarily for commercial buildings. FORN has a dominant market position globally in linoleum flooring with more than 70% global market share. Damn. While linoleum flooring has not grown as quickly as vinyl flooring in the past due to a lack of customer awareness and vinyl's more appealing design options, it has been a stable profit center for FORN, providing consistent free cash flow. We expect FORN SW's new linoleum products to gain a greater share of the flooring market as they have become much more comparable to vinyl in terms of design. Additionally, linoleum flooring contains only natural materials, making it one of the most environmentally friendly flooring products. Therefore, the global push to increase sustainability is giving Forbo much better opportunities to market the product, and they stand to gain the most given their market dominance. Over the years, Fawn has also achieved a much more balanced flooring portfolio by expanding its offering beyond linoleum to the higher growth vinyl floors, focusing only on higher margin products that are less subject to low cost competition. Given 80% of the company's floors are sold to healthcare and education end markets, and 40% of sales are tied to renovation/slash remodel, sales have historically been less sensitive to economic cycles. Movement systems, 32% of total sales. FORN is a market leading manufacturer of specialized conveyor belts mainly used for food and beverage production and handling. FORN conveyor belts are viewed to be the highest quality, with industry participants calling FORN belts the Cadillac of the industry. Around 60% of the segment sales are attributable to the Transilon product line, with about 75% of its sales derived from food processing customers. Focus on specialty conveyor belts and processing belts, Transilon is a market leading brand with over 600 designs. For example, it has a patented fabric belt that includes a sealed belt edge which prevents bacteria and liquids from penetrating the belt. This improves the safety and quality of food processing customers' products and increases the longevity of the belt. The remaining 40% of the segment sales are from several other product lines such as Transtex, ProLink, and Extremultus. And markets served by the other brands include logistics, mail, packaging, and food and beverage. This business has a high degree of recurring revenue as belts and busy manufacturing and production facilities routinely need to be replaced, and this business continues to benefit from increased automation in logistics/slash warehouses and manufacturing facilities. As reflected in the table below, FORN has historically generated consistent results. It's worth noting that the strengthening franc has been a headwind to FORN's top line, most notably in 2015, given most of its sales are outside of Switzerland. In constant currencies, FORN had a 10-year top line CAGR of 2.9%. Shares of FORN are down 32.8% from its 2021 highs as the war in Ukraine caused enormous macro uncertainties. The rapid increase in commodity prices pressured FORN's margin beginning in early 22, and the European energy crisis in late 22 resulted in a slowdown in customer activities across Europe. Following a rare profit warning in November 22, the company reported a 22 EBIT of 132.6 of Swiss francs, 132.6 million, of course, Swiss francs, significantly below the prior year's 179 million. However, 20 million francs of the profit decline was one time in nature, the majority of which was related to the company's rapid response to the changing environment and right sizing of its cost structure to preserve profitability. While continuing to expect a weak economic backdrop, the company issued a net profit guidance for 2023 that's 30 million francs above 22's results, highlighting the company is back on track. Over the past 19 years, FORN has been led by executive chairman this Schneider. I don't know if this is his name, but probably autocorrection. Chairman Schneider, who personally owns 2.8% of the company, along with Michael Pieper, who personally owns 29.3% of the company. Together, they run the company conservatively and choose to return capital to shareholders rather than make risky investments. In the last 10 years, management has returned 75% of FORN's operating cash flow and excess cash to shareholders, including the repurchase of 30% of the company's shares. Aside from an unexpected earnings recovery and trading at a true valuation, there is further upside from a recent CEO change. In March 23, the former CEO of Cardex, Jens Funkel Hannel, joined FORN to be the company's new CEO. Cardex is a publicly traded materials handling company we have followed for years and think highly of, and we're delighted to see its CEO jumping ship to lead FORN. Under Jens' leadership, in the past 7 years, Cardex grew top line at a 7.9% annual rate while consistently improving profit margins. Similar to FORN, Cardex also prioritized shareholder return, as 63.5% of operating cash flow over the last 7 years was returned to shareholders via dividends and share repurchases. As a result, Cardex shareholders enjoyed a 157% total return during Jens' tenure as this company's CEO. Armed with a net cash balance sheet, the new CEO will be able to withstand any further economic softness and, more importantly, focus on accelerating growth in the movement systems business as facilities worldwide continue to increase automation. We believe FORN is hyper-focused on improving profitability and that, when combined with low expectations, will allow FORN to exceed expectations in 23. There's further upside when Europe comes out of its energy crisis and customer activities are no longer constrained. In the medium term, we believe FORN's linoleum business will benefit from sustainability, and its movement systems segment will benefit from increasing automation. Downside is limited as FORN is net cash, consistently generates cash, and will likely tender for shares again in the fall if they continue to trade at a discounted valuation. Catalyst, beating 23 guidance, continued large share repurchases. Thank you very much for tuning in. See you next time. Please write down in the comments below what you think of this